Welcome to the video presentation of our Group Assignment 1 for the subject EBA4073 Internal Audit. The title that we are going to discuss today is the overview of internal auditing. There are 6 group members in our group, which is Heng Ji Tian, Lee Choi Yi, Roger Lin Ki Mo, Tan Zi Ting, Tiang Ying Ting, and Woon Wei Wan. So the first section that we are going to discuss today is the subtopics of the internal audit we have learned in our previous auditing class.
The Institute of Internal Auditors North America (IAA) define internal auditing as an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. Internal auditing helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance process. Internal auditing is an appraisal activity within an entity. It improves the effectiveness of management in managing the risks and controlling and monitoring the process of governance. It helps to fulfill the 3 main functions, which are effectiveness, efficiency, and economy. Internal auditing can add value and improve the operation of the organization. The work of the internal auditor consists of ensure the internal control are adequate, ensure accounting data and record is reliable, and detect errors and frauds. The Malaysian Code of Corporate Governance 2007 requires all public listed companies to have the internal audit function. The function of the internal auditor consists of monitoring of internal control. The internal auditor monitors the internal control to determine whether the internal control is proper and suggest the improvements. The second function is the examination of financial and operating information. The internal auditor review and measure the financial and other informations. The next is the review of operating activities, where the internal auditor review operating activities to check whether the operating activities are efficient and effective. Not only that, the function of internal auditor also include review of compliance with laws and regulations. The internal auditor examines whether the organization is compliant with laws and regulations. The next is governance, where the internal auditor examines the governance to check whether it is follow the ethical value and fair and suggest the improvements. And next is the risk management, where the internal auditor examines the risk management system and provide suggestions to improve the risk management system.
Evolution of internal audit. There are 3 areas of evolution in internal auditing. The first one is area of financial controls, and the second one is area of business advice, and the last one is area of governance partners. Difference between internal auditor and external auditor. Internal auditor is an organization's employee or can be also an independent entity and not usually a member of MIA. While the external auditor is an independent contractor practicing accounting from outside of the organization and a member of MIA. Next, the internal auditor serves the needs of the organization and the function must be managed by the organization. But the external auditor serves the third party who need reliable financial information in compliance with the Company Act 2016. The third one is the internal auditor focus on the future event by evaluating controls designed to ensure the accomplishment of the entity goals and objectives, while the external auditor focus on the accuracy and understandability of historical events as expressed in financial statements. Besides that, internal auditor is directly concerned with the prevention of fraud in any form or instead in any activity reviewed, while the external auditor is incidentally concerned with the prevention and detection of fraud in general, but is directly concerned when financial statement may be materially affected. Next, the internal auditor is independent of the activities audited, but is ready to respond to the needs and desire of all elements of the management, while the external auditor is independent of the management and the board of directors in fact and in mental attitude. Lastly, the internal auditor reviews activity continuously, while the external auditor reviews records supporting financial statements periodically, usually once a year. User of internal auditor and external auditor word. Usually, the internal auditor word used by management, board of directors, and employees, while the external auditor word used by investors, creditors, customers, suppliers, and the business partners.
Next, we talk about what are the general tasks of the internal auditors. Many companies choose to employ internal auditors despite not being legally obligated to do so. They believe that the internal audit is a key way to correct issues quickly, maintain a good reputation, and prevent money wastage and corruption. Firstly, internal auditors evaluate the accuracy of the accounting and financial record-keeping processes. Internal auditors evaluate and assess the financial and accounting practice of the companies. They ensure that the transactions are recorded in a correct procedure and figures, all the accounts have the correct balance, and eliminate the material misstatements due to fraud or error. They inspect all the relevant records and documents, verify the physical inventory levels, and scrutinize the financial statement. They also have to ensure that the accountants prepare the financial statements and reports in accordance with the relevant laws and regulations, such as Malaysian Financial Reporting Standards (MFRS) in Malaysia. And the managers and directors do not manipulate the financial information to achieve the goals by overstating the income or understating the expenses. Second, internal auditors ensure that the company and the employees are in compliance with relevant laws and regulations. The company shall conduct the business in accordance with various laws and regulations to ensure that the business are operated without violating the law and maintain a good reputation among the public. Some of the examples of the laws and regulations are the Companies Act 2016, Malaysian Financial Reporting Standards (MFRS), and Malaysian Code on Corporate Governance (MCCG) 2017. The internal auditors should ensure that the company complies with all the aspects stipulated in the Company Act 2016, such as allotment of shares and appointment of secretary. Besides, the company should prepare the financial statement in accordance with the MFRS to give the investor the accurate information of the company. Other than that, the company should also comply with the MCCG 2017 to increase the transparency and accountability, thereby strengthening the corporate governance. Next, internal auditors assess the risks and internal controls of a company. Internal auditors conduct risk evaluation on the entire company and departments. They evaluate the efficiency and effectiveness of the risk management procedure that are currently in use in the company. They ensure that the internal control activities can prevent the error and fraud being occurred and detect the undesirable acts. They also have to ensure that the internal control activities are performed as planned and useful. The last is the internal auditor can provide recommendations on the company affairs. Internal auditors are responsible for offering recommendations to the management team on ways to improve the company performance. They will gather and access all the relevant and tidy information such as sales, productions, profit margins, and industry benchmarking report. Based on the information, they identify the problems and what corrective actions can be taken to solve the problems. They advise the top management team to improve the business operation and procedures to overcome the shortcomings or enhance the performance. After that, they will follow up the progress and collect feedback to be used in the future.
Next, we proceed to the necessity of internal auditors in a listed firm and also their daily tasks in the firm. Internal auditors had been enhanced as one of the key role players in a listed company after several fraudulent cases like WorldCom and Enron had happened. Based on the previous experiences, the internal auditors are important as they are responsible to ensure good governance practices of the company in order to protect the shareholder and stakeholder interests of the company. Besides ensuring good governance practices of the company, as well as to protect the interests of shareholders and stakeholders, the internal auditors also need to ensure the accounting processes are parallel with the law and regulations of the country, so that the financial reports and data collection of the company is accurate and timely. Moreover, the process of internal audit also provides tools for the management to attain operational efficiency of the company. They identify problems and correct the mistakes before they were discovered by external auditors. On the other hand, the daily tasks of internal auditors are very broad due to its independency and job scopes designed to add value to the company's operational. An internal auditor helps the company to achieve its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, to assure the internal controls of the company are sufficient to leverage the risks, and also to make sure that the government processes of the company is effective and efficient so that the goals and objectives of the companies are met. Other than that, the internal auditors are also responsible to evaluate the emerging technology introduced by the company, as well as to communicate information and opinion with clarity and accuracy. Their jobs in return will form a valuable resources for the company to accomplish its goals and objectives overall. Moreover, it also helps to strengthen their internal controls and organizational governance.
Moving on to the next part, we are going to discuss about what will happen if there is no internal audit in big organization. First and foremost, the risk of fraud happening in the big organization would increase. Although the tasks of preventing and detecting fraud are mainly the responsibilities of the top management, the function of internal audit also plays a crucial role. With the absence of internal audit function, lesser red flags indicating fraud will be identified and the evaluation of the effectiveness of controls that can help to prevent and detect fraud could not be conducted. Besides, there is no independent assessment of fraud risk and anti-fraud measures implemented by the organization. Other than that, it will be harder to attract new investors, especially when the big organizations are facing financial problems. As investors want to earn profit from their investments, they tend to be careful when deciding which organization to invest. Some criteria such as the financial performance of the company, the performance of the top management level, and the presence of internal audit function will be taken into consideration. The presence of the internal audit report will generally give more assurance to the investors that the risk management, governance, and internal control are being implemented effectively. Meanwhile, they will think twice when there is no internal audit function. Moreover, there will be a less effective risk management control and internal control in place. This is because there is no experts giving independent and objective assurance that the risk management policies and internal control are being implemented effectively. Next, the adequacy and effectiveness of the risk management framework are not being audited. There is also no recommendation from independent experts on how to improve the risk management control and internal control.
So the next question is, can the internal audit fail, and if it fails, what can the organization do? So the first subtopic of this question is, can the internal audit fail? Yes, in fact, there are 5 ways that the internal audit can fail. First is avoiding high-risk areas or silently accepting scope limitations of audit. This is because there are times when management asks internal audit not to look at an area specifically. They know there are problems in that area, yet the internal audit does not have the expertise to address such critical risk. Therefore, the board may not be aware how serious the problem is, and there may be undiscovered issues in the problem area. Second would be ignoring organizational culture from a toxic company. This happens when things go wrong in an organization, and the stem of the problem often comes from a toxic organizational culture. Some experienced internal auditors would prefer to stick with the audit issues that are more easily handled compared to those relatively low risk. As a result, the unhealthy organizational culture would then grow from a minor issue into a major disaster. Third would be the failure to perform follow-up with management regarding the problem raised. Being an internal auditor, our job does not just end at reporting the issues to the management, but we must make sure to follow up with them on how they are going to solve the problems. However, often the follow-up is not done properly and therefore causing a big problem at the end. Then would be assisting clients to conceal reportable issues to management. In fact, a fair and balanced audit report must state every audit issue clearly without concealing any facts. However, most clients would ask the internal auditors to bury a problem so that it looks less severe than it is. Finally would be the failure to provide adequate reporting about internal audit in details. The board has a duty of care that involves active oversight of the internal audit function. For example, the audit committee reports must include issues like internal audit performance. However, some might lack of details like budgets and staffing requirements that cause the internal audit to be less accurate than it should be. Okay, the next subtopic of this question is, if it fails, what can the organization do? The organization can recheck the work done by the internal auditors and amend accordingly before it is too late. As long as before the submission, any amendments can be done accordingly. Next, the organization can also try to build a healthy organizational culture because organizational culture determines the effectiveness of internal audit. The organization can also do audit planning before accepting any internal audit job in the future to ensure the job scope is within the ability of the internal auditors team. With this, the internal auditors can complete their job with full force and minimize the errors in the future. in conclusion, generally, internal audits evaluate a company's internal controls as well as its corporate governance and accounting processes. The internal audits ensure compliance with laws and regulations, at the same time help to maintain accurate and timely financial reporting and data collection in overall. Alright, that's all from us. Thank you for watching and I hope you enjoy our video presentation.